Also joining me today are Jan Seysens, the head of Unit for Digital Finance in DG FISMA, Ansgar Köhne, who's the Global AI Lead for regulatory issues within EY, Tony Seo, who was with us at last year's conference, and I enjoy seeing you again, who's head of regulatory strategy and innovation at NASDAQ, and last but certainly not least, Barry West, who's the head of applied innovation and research at Abu Dhabi Global Markets, so another regulator. Maybe, Rupert, if I pick up on some of the themes that you've just raised, the first one you raised is kind of some of the risks and opportunities arising out of AI and some of the use cases. And maybe I continue on the regulatory side, public policy side, and bring you in first, Jan, and then Barry, to maybe also look at it from a public policy perspective, and then I'd like the industry to challenge maybe some of the things you've said and see what's happening in the market. So maybe start with you, Jan.
Yeah, thanks very much, Nick, and also Rupert for actually providing a very good introduction into the topic from the public side, on which I can then easily build. I think from our side, indeed, I think we see a lot of potential in AI. I think the Commission has recently made this quite clear again, also with the AI promotion package, and our President von der Leyen has made quite clear in Davos, indeed, that we also see here a lot of actually opportunities which we want to support and promote as well. And indeed, I think, of course, the first stepping stone, especially in finance, is always regulatory clarity. We will see later in the week whether indeed the AI Act agreement is also confirmed. But if that's the case, which of course we hope, then indeed I think the regulatory clarity will definitely be there. And as Rupert indeed says, it's not a revolution; it's more an evolution, especially in the financial sector, where many of the, let's say, risk management principles, which are also in the AI Act, are already well known and indeed part of existing financial services legislation. And I also want to stress indeed very strongly the principle of proportionality, which is inherent in the AI Act, again, very much in line with what we know from financial supervision. So very concretely, I think there are only two particular areas where indeed the AI Act will kick in with very concrete requirements in financial sector. That's, I think, the very specific use of AI for creditworthiness assessments and indeed for certain types of insurance, life and health insurance. So I think those are indeed particular areas where indeed particular requirements are established here. I think in many other areas, say the general principles in the Act are the ones we know from our risk management already. And in that sense, I think we will also have to continue to rely on the existing financial services legislation here very much. But I think that already shows indeed that we need to, let's say, distinguish a bit the different use cases. And I think this distinction of different use cases, how much is it the core really of finance which we're looking at, as opposed to, let's say, more supportive functions, is of course also something we see a bit in the market. I think probably from what we understand is indeed that probably at the start, for very good reasons in many financial firms, is indeed more the support functions. And there's already a lot of efficiency which can be actually leveraged, and the risk involved and also the need for supervisory or regulatory interference is relatively low. So I think that's definitely the area indeed where many people are starting and should start. And then I think we'll slowly also, let's say, go a bit more to these more core areas of risk assessment, risk management, which of course then are maybe a bit more challenging, and also then, for example, the AI may need to be what I just want to stress as well is that indeed I think the AI Act will also be quite useful in the generative AI area, because it will provide indeed a framework also for the providers of general purpose AI systems like indeed generative AI. And that's something on which also financial supervisors will then be able to rely in a way, because of course those Gen AI models are not used just in finance, so they will not be, let's say, fully under the realm of financial supervisors, but indeed with the AI Act, providers will have a very good basis actually to then build on their work on the specific application. And then I think from our side, as important as the regulatory clarity is, of course, that something is happening, that people are experimenting and moving forward on this. And that's where I think we have since some year have this in mind and continue to support with a number of measures. I think a key area is, of course, data, and I think all the work which you are discussing in other panels today, which we've discussed in the past, whether that's the European single access point for disclosures, whether that's open finance, the feeder proposals, whether that is indeed the work on data access in other sectors. All these measures are, of course, the foundations on which indeed then AI can also be successfully developed, and we can support that here with our measures. So really, I think we need to continue this work on the data spaces, on the financial, but also others actually to promote here. I think access to computing power is another area where indeed we have recently made additional proposals, also opening up indeed the European facilities here for especially for smaller companies. And last but not least, of course, support in research and innovation. So I think those are really a couple of wide panoply of measures which we're making available here also to support the development in Europe. And then I think the last, maybe the most important ones is indeed also the skills and talent area, where we really need to build on this. I think a small contribution we're giving from the EU, indeed, with our Digital Finance Supervisory Academy, where this AI is themed in upskilling supervisors. But I guess it's a challenge as much for the sector than for the supervisors and we also.
So yeah, my name's Barry West. I look after the applied innovation and research team within the regulator in Abu Dhabi Global Market. I guess if you want to kind of put it into kind of context, what we try to do is experiment with the technology and try and, in order to try and help inform our policy colleagues as to kind of risks and use cases and indeed what kind of frameworks we may put in place ourselves. And maybe I can touch on some of the stuff we're doing ourselves with experimenting with lots of different large language models and Gen AI in a minute. But just to give you guys some context of Abu Dhabi and the UAE as a jurisdiction, I guess unsurprisingly, there's a huge drive here for the adoption of AI, Gen AI. And we see this in a number of very practical, large kind of initiatives. Very recently, a fully focused AI university was created only 2 years ago, called the Mohammed bin Zayed University of AI. It's got some of the best and brightest minds setting up there to establish this university as a leading expert in this area. We've seen 2 large language models created and built from the UAE called the Falcon model and Jace, and they have been open sourced for developers to come and play with. And they actually fairly recently were, I think they were marked number 2 or 3 in the Hugging Face leaderboard, which is the leaderboard that kind of rates all of the different large language models. I think it has slipped down a bit now with all the recent advancements, and there is very quick advancements happening all the time. And then also kind of across all of the government organizations here, there's a number of initiatives that are looking to try and help speed up the adoption of Gen AI across many different use cases. And so they're very much focused on trying to remove some of the blockages and so on and so forth. So that's kind of like the kind of environment that we're working in here. And within the regulator, we've very much got a watching brief on what's going on internationally. So as Rupert mentioned, and Jan mentioned, many of those risks are very kind of relevant and pertinent to us, not only internally as a regulator, but externally to the firms we regulate. And so we're clearly on a watching brief to ensure we're very much aligned to industry best standards, and that to ensure that we as a kind of international community make sure we put the most relevant guardrails around this incredible technology that's coming our way, but at the same time, kind of enabling or not stopping innovation as well. So Rupert mentioned quite a number of risks around kind of hallucination, accuracy, and other bits and pieces around profile and so on and so forth. And that's very much magnified for us as a regulator as well. So how could we use some of these tools and give that to the firms that we regulate? And so these are some of the, not only some of the policy thinking that we're looking at, but how do we adopt it ourselves and provide that to the firms? So very much hands-on here as a regulator. And perhaps later we can discuss some of the use cases that we're working on. But thanks.
I said in EY, and within EY, obviously, we serve a lot of financial sector firms as well, provide them consulting as well as assurance services, including looking at the use and adoption of AI systems. So interestingly, I think some of the types of questions that have been coming up around what are the new risks that AI can be introducing, someone mentioning that a lot in many cases, these systems are currently being put in place in support function as opposed to in the primary financial services, is that there are questions like, okay, so how is this AI Act now going to start to impact things like our use of AI in human resources? So the fact that we, as in the financial sector, start to need to think about applying some of the procedures that are already used to being done for the financial functions, also outside of those particular ones when it comes to the use of AI in support functions. So that is one element that I think is we're seeing quite a number of questions around. Okay, we have these existing risk management functions for our analytics systems, which the financial sector benefits from greatly. It has a great starting point for being able to understand how to deal with AI systems because of those existing regulations and therefore those existing risk management procedures. But now the question is, so how do we apply these into the other support kind of functions? But also one of the questions that arises, especially sort of in the regulatory kind of risk space, is we've got the existing regulatory obligations that are largely focusing on systemic risk and on maintaining the stability of the financial sector. But now we're having the AI Act, which is focusing on risks to individuals. So there's a need to think about, for instance, if we were to perhaps change some of the lending practices in terms of how we assess whether there is bias in an assessment from an individual perspective, how might that reflect on the systemic stability questions for the financial sector, our lending practices from the point of view of the stability of the firm? So, these kinds of balancing questions between the different types of regulations is an area where there are questions that are arising, as well as perhaps if we're looking at things like generative AI, general purpose AI, through the way in which this technology is being provided, the reliance on foundation models, large-scale models that are really being produced by a small handful of core technology developers and then exported. There is a growth in more of the third-party models, so it's less of the fully in-house developed system. They are still being adapted. They're still being fine-tuned to focus on working properly in a particular organization, but there is that link to an external third-party provider. And so needing to think about what are the right questions to ask to the third-party provider, etc. And obviously the AI Act with its clauses around general purpose AI is a great guide to help clarify what are these key questions that need to be asked. But there is certainly an area where there are new potential challenges arising. And I think maybe I'll hand over to Tony to fill out the industry perspective.
Oh, great. Thanks, Ansgar. So it's Tony Seo here from NASDAQ. And I kind of like to just echo kind of some of the comments from the other speakers about this kind of being a kind of like an evolution of kind of practices and tools which the financial sector has already been dealing with and working with. But I'll make an additional comment, and I think kind of evolution kind of happens in spits and spurts, right? And I think what we're experiencing now is a real kind of like fast-paced spurt of evolutionary activity in this space, which is kind of why we're talking about it so much at this event, right? So from NASDAQ perspective, we're we're looking at kind of like AI in terms of pros and kind of risks, and kind of pros and cons, risks, and kind of other factors. So some of the kind of risks that we look at are very much kind of risks from a kind of market perspective, just to give a different perspective to one of the other panelists have been talking about. So some of the risks include things such as kind of fake news, right? And I think this has kind of come up actually quite a lot kind of recently, all right? But the ability for kind of these kind of AI tools, plus the proliferation of social media, right, to make kind of like fake news, potential market impacting news, impacting events. And I think there was, already a kind of example of this where kind of like there was a fake AI generated image of an attack on the Pentagon. This happened kind of last year, right, which potentially moved the markets. So we saw that as a kind of like a sign of potential risks to come. Kind of other risks to kind of mention, and I'll kind of mention one mentioned by kind of Gensler at the SEC, which is around AI washing, which is a term which I think he's kind of popularizing, where kind of firms are essentially kind of touting kind of non-existent AI capabilities, right? Because it is the buzzword at the time, right? And these are kind of like this is a risk that is probably like a different kind of style of risk that some of the other panelists are mentioning. Right. And then kind of final, another risk that I'll mention that we've been reviewing is things like what we call AI herding, where the proliferation of AI models could create potentially kind of like systematic risk in the marketplace through types of kind of herding effects. All right. But we also see kind of real potential kind of benefits and pros here. And we kind of in terms of AI. And I thought the way to describe some of this, talk about kind of like a few of the use cases. Let's just talk about two which we're using at NASDAQ, which maybe kind of like some of the other panelists could kind of jump off on. So I think the first one, which I think people will find quite interesting, is so NASDAQ has put out got approval for the first AI order type, right? So it's an order type, such as limit orders, market orders. So this one we call a dynamic MILO, right? So it's an order type which is fundamentally kind of based upon kind of AI technology. Right. And I think this is a kind of like a great example of how kind of like the specificality and how kind of AI kind of tools and products are really insinuating against kind of like the core kind of functionality of how marketplaces and financial ecosystem works, right? Where even the kind of most basic fundamental aspect of a market, which is kind of the order that you put in, has facets of AI in it. Right. And I think it's a great example to show you kind of the scope. And that order type we've already kind of expecting or tested on it, and it's been had great success. I think statistics we have is it's getting us, I think, 20% kind of improved kind of fill rates for people who use that order type. And then I'll give kind of like another example which kind of shows the kind of breadth of potential usage as well. So NASDAQ isn't just a marketplace or a market venue. We're also a fintech provider as well, right? And we're a large provider of anti-financial crime technology out into the marketplace. And we kind of have looked at the kind of essentially the workflow of our anti-financial crime tools, which focus on things like anti-money laundering, market integrity, market surveillance, and the such. And you can really kind of see kind of AI potentially proliferating across that entire life cycle, from the data cleansing side, kind of using AI to support data cleansing, data normalization, to detection of abnormal behaviors, adjusting, supporting kind of like the system optimization. And then finally, we have a very kind of interesting project that we're running where we're using generative AI for investigation support, right? So analysts would historically our system would find kind of cases of potential bad behavior in the marketplaces. Analysts would need to spend time gathering kind of a variety of different evidences about the market behavior, about that stock, about that firm. And what we've been able to use is we've been able to use kind of generative AI to essentially kind of like automate a lot of that collation of that data together, right? And prioritization of the data in terms of relevance, for that specific investigation that has been kicked off, right? And then just that facet of the AI has been able to save kind of quite a significant amount of times for each investigation case, right? And then we've also kind of been experimenting going further where we're trying to use AI tools to try and say kind of like what are types of, what is kind of supporting evidence for this case and what is potentially kind of mitigating factors. So for example, although this is unusual behavior that the tool has detected, this evidence shows that that unusual behavior is potentially kind of more likely a false positive because there was this activity happening in the stock, right? And false positives is something that just from a kind of like tools and behaviors perspective is a huge kind of time concern that we have, right? So from I would say from an AI perspective, we're seeing kind of great potential benefits in terms of the actual tools to from a variety of perspectives, the fundamental kind of building blocks of the marketplaces, but also on supporting around kind of fighting financial crime, maintaining market integrity in those aspects. All right. And then as a kind of like a jumping off point, I'll kind of talk to the other panelists. I'll kind of talk a little bit about the kind of governance that we're doing. So we have a fairly kind of comprehensive AI. We've been doing this for a while. I have a fairly kind of comprehensive kind of internal kind of NASDAQ AI governance kind of program that we put in place, right? We've kind of aligned it kind of essentially with our kind of corporate governance, right? But we see this is kind of like an additional layer because of the additional kind of complexities, kind of the newness of some of these aspects. So, and kind of ensure that we have the appropriate kind of guardrails in place. Right. And then I think kind of like guardrails is kind of like the key. I think one of the kind of concerns that we have from a kind of regulation perspective is that the regulators aren't kind of overly kind of stifling of innovation, right? Like kind of guardrails, provide guidances, kind of internal controls. But if the regulation kind of outright says kind of you can't use this data, right? Then it kind of limits the kind of potential use cases that you can have and really kind of potentially stifles innovation, right? So I think that's the kind of fine line that regulators kind of essentially need to kind of walk kind of as they're putting in these kind of new AI regulations and guidances.
Thanks. I've come back, as you see, in a slightly different image. And thanks for keeping things going, Jan. I appreciate it. In fact, I should have asked you to moderate the whole panel. It might have been an easier process. But picking off on what you said so far, I would like to come to kind of the regulation side of the conference, so fintech and regulation or public policy response. And Jan, you kind of talked a bit about the importance of the AI Act and use case applications. And you mentioned these two high-risk potential use cases of creditworthiness and life and health insurance. Could you explain a little bit more to the extent it's so clear, because we haven't seen the final text yet, but for those specific high-risk use cases, what will be the relationship between the financial services regulator and this new oversight body that's being created within DG Connect?
Yeah, right. That's, I think, indeed dives now into the administrative arrangements, and I think it's, of course, also depends partly on how member states this will implement. But I think in a nutshell, what we from the Commission side have proposed, indeed, that in the financial sector, because we have existing financial supervisors, that the actual, let's say, enforcement and application would actually be also, let's say, done by the financial supervisors, and wherever possible, indeed, as part of the existing regular review process which are in place. So I think essentially, very simply, in an ideal world, I think, of course, a firm will always do a self-assessment, I guess, indeed. And I think, Tony, you described the NASDAQ processes, actually, which you have put in place. I think that's a perfect example. You will do a self-assessment, and I think that, of course, will in the future also then, let's say, include the compliance with the, of course, with the AI Act, I imagine. I guess the principles which are in there, which again are the general principles indeed on, let's say, data input, data management, human oversight, transparency, and others. And then indeed, and any, let's say, supervisory actually enforcement action would then be very much part of the existing processes which are in place for banks and insurance companies. So how does then the AI office come in there? I think the AI office has a particular function, particularly for the providers of, let's say, general purpose models. So generative AI, of course, in particular, which I think, because of the market structure, which I think also you guys already explained, are in most cases not likely to be financial institutions, I guess. So that will be indeed external tech providers. So I think the AI office has a direct, actually, a direct responsibility in this respect. And for the rest, indeed, it is a coordination body which indeed, let's say, ensures general guidance and, let's say, provides coordination among the different authorities. But it would, let's say, for the specific high-risk cases, be indeed for the users of, let's say, for example, Gen AI models, bank indeed uses Gen AI, then indeed that use actually and the necessary guardrails would actually be overseen by the financial supervisors. There is a bit of flexibility there in the AI Act, actually. The member states can also, exceptionally, if they want to, let's say, nominate a horizontal authority for all sectors, including finance. I think we are really recommending here from our side, actually, to try to integrate this as much as possible in the financial supervisory side. I mean, I think, Ansgar, is an interesting point which you mentioned, indeed, on the perspective of financial stability and the perspective, indeed, of individual, let's say, of the protection of individuals. From our perspective, very often, and would be interesting to deepen that a bit, the two things in the end, they are maybe having different theoretical objectives, but in the end, what do you practically need to do? Actually, those are quite similar things. I mean, very practically, it still means both that you need to have a proper data management, that you, of course, cannot use discriminatory data. I mean, that's anyway the case, and financial firms are doing that even as part of their risk management, that you need to have a human oversight. So actually, because the practical implementation, the principles are really procedural principles, from our side perspective, we see maybe less of a kind of very strict, let's say, dichotomy here, or maybe even a contradiction between these different objectives which are more kind of focused on financial stability or indeed on the protection of individuals. But that's, I think, something where ultimately we also have to see how it pans out.
No, but I think I would confirm or agree with you that to the extent possible, it should be the financial services supervisors for this sector that should take the lead. In fact, we tried to propose that in the text itself, but it was seen as being too sector specific, so it didn't make it in to the final text. Maybe Barry, over to you, and then to Rupert, going maybe a bit beyond the AI Act to public policy responses in general. I know we started talking about this already, but how should regulators and supervisors actually respond? Is it really through regulatory initiatives? Is it more about standard setting, certification initiatives? What type of a public policy approach are you thinking of, and how are you applying it in your own authorities so far? So maybe, Barry, I start with you, because I know ADGM has been kind of at the forefront of using AI applications in its supervisory processes.
Yeah, thanks, Peter. Great questions. So I think just initially, if I set the scene again a little bit, we've recently, well, we will be publishing our IT risk management guidance document very shortly that covers many of the subjects that we talked about, from the data management side of things, governance structures, risk management, IT risk management, and then, of course, the kind of, I'll sort of use the MAS expression, the FEAT elements, so fairness, accountability, trust, and explainability. I probably spelled that wrong, but so we've kind of expressed our expectations on the firms in our jurisdiction around this kind of broader subject. But I think we probably do need to start looking a little bit deeper, and I loved what Tony said around that kind of augmented governance structure within his own entity. And I think we'll probably get a combination of both. And I think if I look at it from the point of view of an example that's already out there with regards to a slightly different domain, but the open banking entity, and its relationship with the Financial Conduct Authority of the UK, which is where I was before, you've got one part being looked at by the regulator for the fintech. So you've got the governance and controls and the fit and proprietariness and all of those good things around the kind of entity itself. And then the open banking entity looks after the technical aspects. So are the APIs meeting the standards? Is it using OAuth 2? Where does the liability end? Have they got a complaints procedure in place, and so on and so forth? And I think what we probably get to, I anticipate some jurisdictions getting to the place where there's a similar process. But I'd hope that the regulators, and indeed I'm pushing our regulators, ourselves, to actually combine that role. And I think we're seeing that generally regulators are getting more comfortable with technology and being able to see it. Though I always get my former colleagues in the back of my head saying, we're not a technology regulator, and I agree, but I think we need to get a bit closer, and we need to understand the real issues from a practical point of view. And this is why my department is around, and that's the purpose of my department. And so what we're doing is we're experimenting with a number of different use cases of Gen AI. One, to actually use ourselves to help. And actually Tony's example of the investigation tool is something that sounded very similar to the tool we're using and building for our authorization colleagues and supervisory colleagues. And the point of that is to basically ingest all of this huge voluminous amount of documentation that we get from a potential applicant coming in at the authorization stage, and very quickly assess if there's any gaps. Does the business model make sense? Are there any red flags? Is there any areas that we need more information from the firm or the potential applicant? And so the authorization team can then go back and very quickly respond to the firm. So there's huge efficiencies there. But that's, I guess, again, back to the kind of original point that you were mentioning, like the regulatory or supervisory kind of use or response. That's kind of okay. We can use Gen AI out of the box almost for that use case, because there's always a human in the middle there. There's always someone that looks at that and assesses that and kind of makes sure that the insights derived are useful and there's no hallucination, for example. And then on the other end of that scale, how can we maybe use that same Gen AI to derive new insights out of this information that we would never have seen before? And so are there any red flags, and what should we do as a regulator, and what should we be aware of? Now, that's from the authorization point of view of a firm, but if you look at it from the point of view of the technology as well, I can easily imagine that same use case being deployed over a very much more tech-focused entity. So hand in hand with that, what we're looking at is how could we possibly score or put some sort of metrics around large language models, not the kind of stuff we see from the kind of academic world with how big they are, how good they are, how accurate they are, so on and so forth. But actually, from the risk point of view, do they allow? Does it go off track? Does it give misguided information, and so on and so forth? So, as part of our work to train our kind of own tools, we're building up this kind of knowledge base of questions, and it's very similar in concept to if you've heard of like the Netflix Chaos Monkey type scenario, where in Netflix purportedly they've got this agent that goes and turns off various different APIs and makes sure that it can contain this issue and manage to keep running the videos for everybody that's streaming them. I see this as a very similar concept. So you've got the kind of Veritas tool that measures the algorithms, but then can we have this kind of chaos tool that throws in all of these questions to these large language models from a risk point of view, from a regulator's point of view, obviously looking at use cases within financial services, and look at what happens, and does it cause harm, and does it provide bad responses, and so on and so forth. So we're at the beginning of that journey, and some of the stuff we're doing around kind of like the guardrails that Tony mentioned as well. How can we ensure that it doesn't go off track? How can we ensure that there's 100% accuracy in its responses? And this will help inform our policy folks as to around what we can do. And then, of course, the supervisory colleagues will feel much more comfortable going forwards, but still a little bit early on.
Thanks, Pai. Maybe the same to you, Rupert. I know you mentioned earlier that you also are preparing yourself as an organization for the greater use of artificial intelligence?
So I think it really starts with understanding the issue. So we are investing in developing our skills, hiring the right talent, of course, or train our staff. And this implies really also that we have a very open dialogue with the sector, financial firms, but also technology firms, also I would say academia. So really understanding the issue is important. And this means that, of course, we are also developing our own, let's say, models. We have a large language model in an experimental phase in place. So as a public authority, of course, we have to meet specific standards when it comes to data protection and also safety of our IT. But we have a model in place, and we can already, I would say, test some use cases. And whenever we have to digest large numbers of, would say, pages in reports, or we have large numbers of data, market abuse, artificial intelligence can help, and in particular also generative AI can be a potential, would say, important tool for us. And through our own, I would say, use cases, of course, we learn how this works and where the challenges are. So I would say first step is really understanding the issue, the technology. And then I wouldn't really directly jump to regulation, because supervision is also about asking the right questions. And again, it's about having a dialogue with our supervised entities. And there I would say it's also a continuum. Many topics are not so new when we think about, let's take market abuse, market manipulation, the role of social media. That's really something we have looked at over the last couple of years. Now we have maybe new technology, fake news, deep fakes, audio, video, and so on. But the underlying issue is still quite similar. So we have to, I would say, adapt our approach a little bit, but the basic concept is not so different. Same applies for, well, let's take credit approval process. That's where we have provided guidance over the past on machine learning, also on use of big data. And we have seen that, for example, for smaller consumer credits, the whole process is already quite automated. And that's, again, maybe more an evolutionary step to use other types of AI to make it more efficient, or to have better also approval decisions by banks. At the same time, we see that for maybe larger credit amounts, of course, there's still quite an important human factor. Another example, internal models for risk management. There again, we have issued guidance in the past. And it's really, I would say, not only the pure regulation and new maybe requirements, but it's also how to apply the existing principles in a new environment. And there, I think we have an important task, just to provide guidance, to ask the questions, and also to provide legal certainty how the existing framework applies. And then the last step maybe is where we need really changes in the law, or need new requirements, new regulation. And you mentioned this, Nick. I think this maybe approach, technical standardization, certification, and I think there's maybe some value here in this area of AI, because we have, I would say, the core duties or the core requirements in our specific supervisory law, risk management, for example, governance, but there may be some very specific or AI-specific questions where we don't have really the expertise, and I think we don't have the ambition to become a technology regulator or supervisor. So there, maybe some sort of standardization could be helpful, not to substitute, I would say, the public sector rules, but maybe just to make sure that we have, I would say, some sort of industry best practice and standardization in areas where it really makes sense, where it's not about correcting market failure, but just to have a clear standard. And there are initiatives underway, also here in Germany, sort of an AI standardization roadmap. There are, not only on the national level, but internationally, there are standard setting bodies in this area of technology standardization, which could be quite, I would say, helpful. So I would say it's a combination, supervision, rulemaking, but maybe also some sort of industry best practices.
Thank you very much. And I'm conscious a bit of time. I knew this would be an ambitious panel, particularly even without some technical issues. So to close, maybe two questions, one to you, Ansgar, and to close us out to you, Tony. Ansgar, Jan mentioned at the beginning the question of skills, and everybody talks as if, we've got infinite numbers of engineers. So I'd be interested to hear a little bit how you see kind of the skills gap in the context of this discussion that we had today, because it's nice to have it in theory, but what can we actually deliver in practice? And Tony, given your global role, I'd also be interested in international initiatives. How do we bring interoperability or recognition into the system? Particularly also, we've seen now initiatives through the G7 and so on and so forth, but Europe is moving ahead. It's creating its kind of GDPR type AI Act, not with the same nightmare thought maybe for the industry, but a kind of framework. How do we kind of create some international consistency? Maybe Ansgar first on the question of skills.
Sure, thank you. Yeah, skills is obviously going to be a huge challenge for the economy as a whole, to get these particular skills that not just have knowledge of AI, but also have a knowledge of how to think about it in a supervisory kind of perspective, bringing those kinds of oversight perspectives into it. Within that kind of general space of challenge with getting the skilled people to do this, I think probably the financial sector is actually in a privileged position because of the existing fact that there were already analytic systems being used and there was already, the 3 lines of defense embedded in the way financial sector operates. So there is already a basis from which to build, and simply there's a need to expand with certain knowledge around particulars of machine learning and AI, which even that has already been growing. Perhaps the biggest challenge for the financial sector is going to be the fact that the overall pool for these skilled people is potentially going to pull people away from the financial sector. So retaining the people with the knowledge, and then perhaps attracting some additional ones, going to be the challenge for the financial sector. But I would say, compared to other sectors, probably financial sector is relatively well placed.
Thank you, Ansgar. And just to close us out, because I'm aware Verena is already joining. Tony, just maybe on the international consistency or international interoperability.
I would say from an international interoperability perspective, one of the kind of phrases I heard people talk about, which is not being a kind of tech regulator, is actually a kind of key aspect of that, because I think if you kind of let's dive into the tech regulation aspect, it adds additional kind of regional complexities, right? To kind of rules that there's already been kind of a fair deal of kind of international kind of like level setting around a lot of our kind of financial rules and principles, right? To introduce another layer of kind of very tech focused or even kind of tech data AI focused rules, right, adds additional complexity from an actual kind of implementation delivery perspective that makes it kind of very kind of difficult for us to work with the kind of different regions, right? It's already kind of hard for us to work regionally from a kind of purely kind of financial services kind of output perspective. But once we kind of add this additional kind of tech layer, that kind of really kind of makes it very hard. So and just to end off, I'm kind of very glad kind of the direction around the people we've been discussing here, around the promotion of innovation and the recognition of these kind of aspects. And I think that kind of like lighter touch kind of regulation and that kind of like for like kind of risk for risk kind of regulation kind of is the appropriate approach.
Thank you very much indeed. I think on that basis, thank you very much to the whole panel. Thank you very much to Rupert, to Ansgar, to Jan, to Barry, and Tony for a very good discussion.